Good morning, everybody. Hey, I hope you're doing well today. Welcome to Monday, April 6th. I hope your first weekend of being sheltered at home was good. You found plenty of projects to do as we prepare for this first full week of April of 2020. Hey, remember, folks, it's never too early or never too late to get a review of your current portfolio. Give us a call. We're available, Zoom meeting, phone meeting. We are an essential service, so we can meet you at the office too. Give us a call, 863-382-0037. Make sure you don't have too much risk. You may have already seen that you do. It's not too late to make changes in your portfolio. Again, give us a call, 863-382-0037. And then Dave will be with us in just a moment, and looking forward to that conversation today.
There. My name is Morning Dave. It's 8:40 here, 20 before 9. Let's check in and see what's happening on Wall Street. It's becoming fear and trepidation every morning these days. Maybe you can feel good about today based on the early returns so far. Let's check in with the offices of Statler Financial Services. Phillip Statler standing by to say hi and actually smiling this morning based on the futures, right, Phillip?
Absolutely, Dave. Futures getting a big bounce today after closing down on Friday. So we're excited about that. It's going to be interesting as the week progresses. You and I were talking about before we went on the air, is that, this week is supposedly going to be, according to all the politicians, this is going to be the worst week when we see what the numbers are for the coronavirus. And so for us to be up today, it's going to be interesting to see how we fare the rest of this week.
Absolutely. I found it interesting. I mean, ever since Friday, we've been hearing this drumbeat from Washington saying this is the week that's going to do it. This is going to be our Pearl Harbor. This is going to be the worst week in history. And Cuomo up in New York is saying about the same thing, although the good news out of New York is they're saying that this week they're expected to be the peak up in New York, and then it'll start going down. But we're being very well prepped for some Armageddon-level death numbers and new case numbers on the coronavirus. I'm kind of getting into the point of reduced expectations and limiting expectations. If this is anything better than the worst week in history, it could be a good week financially because we're expecting absolute caca.
Yeah, we are, and to add to that, Dave, we don't have much else coming out, right? I was looking at the earnings reports. There's only, maybe 20 companies coming out this week with earnings, and there's not much on the economics front either. Other than we got jobs on Friday, unemployment on on Thursday, and we do have, I guess we got CPI, PPI comes out, but really that's about it this week.
Yeah, we'll probably get the usual data dump out of the government. I didn't check this, but I'm just going to assume that our normal pattern for earnings season is probably going to get kind of shuffled this time around because a whole lot of companies are not going to release right away. Would that be a fair guess?
Yeah, like I said, we're down to probably less than 20. Well, now look at 25 maybe that will report. And probably a handful of household names that people are going to recognize this week. Now, next week it will start to at least kick in. Come Wednesday next week, we'll get Wednesday, Thursday next week, we get another good bunch will come pouring in then.
I'm assuming our usual flurry of early reporting financial stocks will be the ones that will come in first.
Yeah, I think probably next week. I think that's probably a lot of what's coming in on Tuesday and Wednesday next week. This week, though, I did not see much in the way of earnings from banks. We've got more of the travel industry, so we've got Carnival coming out. We've got Levi Strauss coming out. We've got Delta coming out this week. So those are some of the big names that we've got coming out this week.
The expectations, I'm assuming, for none of them being very high at the moment. I guess the reason I was figuring that earnings season might get bumped because so many executive suites are furloughing off and asking their non-essential personnel to work from home. I got to assume that really has got to screw up the financial reporting calendars.
Yeah, it could, Dave, but a lot of these folks are able to now telecommute and work from home. And so because of that, it should not, I wouldn't think it would slow much down. I mean, I'm sure there are little things here and there that have to be worked through, but because there's so much cloud-based accounting now and VPNs where you can log into your computer at work, that may not be as big of an issue as it used to be.
I suppose. Macro information out this morning. Credit Suisse, one of the great big banks that I used to like, but I'm not sure I like anymore. They're saying, based upon what they're seeing out of our economy right now, that the 2020 gross domestic product in this country for the entire year could go down as much as 5.3%. And they're saying that our second quarter gross domestic product, unless we bounce back real fast and we start letting people back out of their homes, could be down as much as a third. That's almost Armageddon level numbers, isn't it?
It is. It's it really is going to take a toll. And you and I kind of knew this. We realized that this whole deal is going to take a toll on our economy. Now, is it going to be as bad as Credit Suisse believes it will be? That I don't know. We'll have to wait and see how that really all feathers out.
I'm kind of putting that in the level of worst-case expectations, and if we beat it, it'll be good news. It is no doubt whatsoever, just on the grounds that this is going to go down as being a recession. We're just going to cross our fingers that it gets out of it fast enough so that we can't call it a depression before it's over.
Well, absolutely. You're right. We don't want to go into a depression. Recession will be, we can live through the recession and get through it in good shape. I think as soon as this thing's over and people are back out there working and back out there spending money, that we should see a rebound, I believe, relatively quickly once we get through this point.
It should be fairly fast, and with the amount of money that the federal government is pumping into the economy as relief, regardless of one's political reading as to whether it's properly targeted, properly spent, there's a running ton of money being pumped into the economy that when we're capable of getting back out and spending money, there's a whole lot of pent-up demand that's got to happen as soon as these stay-at-home orders expire.
Absolutely, and the other thing I see is that I'm seeing headlines about the consideration, the talk about a second wave of stuff coming through in terms of money to help people.
Yep, it's definitely. We definitely were prepared to spend money in order to soften the blow. The question is going to be whether it becomes another stimulus package like we had at the beginning of the 2009 crash, where it ended up getting spent on things that didn't stimulate the economy anything resembling as fast as anybody expected, or whether or not we actually turn it into cash in people's pockets that gets spent, softens the blow on the unemployment front, and softens the blow on the retail front.
Yeah, that'll be the key, and only time is going to tell, Dave, is how that feathers out and what ends up happening.
Absolutely. As you mentioned, not a lot going on in terms of reports. It's going to be interesting seeing the travel-sensitive stocks. The read on unemployment claims this week, once again, expecting the possibility of, good heavens, a $10 million first-time claim week, a 10 million person first-time claim week was bandied about yesterday. I would suspect that if it's anything better than that, we'll probably see it as being good news.
I would think so, Dave, because let's face it, they were talking about, 30 plus million people becoming unemployed through this deal. And so the first 2 weeks, we got about a third of that, right? And if we have another 10 million or so this week, that'll be another third. And so one more shoe to drop, and maybe we'll be done.
Yeah, fingers crossed on that level. Setting the table, Friday was an off day, but in comparison to what we've been experiencing for the last few weeks, it was relatively quiet. The Dow was down only 361 points. That was about 1.69%. NASDAQ down 114. Standard & Poor's down 38.25. I keep thinking about that number that you were giving me last week of a final resistance level on the S&P. What was it, 2460? We're about 28 ahead of that this morning as we start the day.
Yeah, we are. And so that's a good sign. as we get ready to start the morning. And we've got the Dow and everybody up almost 4% across the board. Dow's up 3.83%. That's a little over $800. We've got the S&P 500 up 94, 3.8%. We got the NASDAQ up 292 points, almost 3.9%. Flipping to the other side of the coin, silver and gold are both up substantially today, too. Silver's up 2%. Gold's up 1.7%. Crude oil is going the opposite direction. It's down 3.5% to $27.36 a barrel.
Yeah, it's still up a bit from last week, though. I noticed that when I filled up with gas over the weekend. I only found $1.95 a gallon over the weekend. It was down as low as $1.91 for a little while last week. So we're sensing a little bit of an increase, too, aren't we?
We are. Oh, we're seeing a little bit there, but hey, below $2 you can't complain.
I ain't complaining one tiny little bit. Overseas markets, they're all kind of following our futures so far this morning. Asian markets uniformly up over the morning. Japan closed 4.25% up. That was a big gainer. European markets between 2 and 4% up as well midway through their trading day. Phillip, you've got a lot of ways to reach out and touch your clientele and give advice to people who are scared to death about what's happening with money right now. How do I reach out and touch you?
Hey, there's several ways. You are absolutely correct. They can call us on the phone, 863-382-0037. And they can schedule a phone consultation, a Zoom meeting. They can come to the office. We are an essential service. We can come to the office. And so those three ways. Let me just say this, Dave. If you're working with somebody and they're not actively making changes to your portfolio and they're just buy and hold and not really doing anything, I'd be a little concerned. We've made several changes to portfolios over the last 4 or 5 weeks, and so I think that's important that people make sure they have enough safety in their portfolio, that they are ready for when this thing does go back up, because it will eventually head back up. Follow us on Facebook out there, folks, Statler Financial Services. And then join us every week for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on News Talk 730 a.m.
And every morning right here with an up-to-the-minute look on Light FM. Phillip, thank you so much, and we'll catch you tomorrow. Fair enough?
All right, buddy. You have a great day, and I will talk to you tomorrow.
I got you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope your week is off to a great start, even though we're having to shelter in place. Make the best of it. Stay away from the news. That's one of the best things you can do right now. And remember, we here at Statler Financial are here for you. If we can help you with your finances, if we can help you walk through the portfolio, what's happening in the economy, that's what we're here to help you do. Give us a call. Let us walk you through what's happening and make sure that you are prepared in case there's any more downturn. Folks, there's no guarantee that this thing won't fall even further. Give us a call at 863-382-0037 for your financial x-ray. It is important. Take care, and I look forward to speaking to you again tomorrow.